are going to kick off our Osmocon in Paris, which is going to be amazing by amazing Sanka. He's going to talk about the OMX perpetuals. Give a big, big round of applause to Sanka.
Thank you, guys. Can I get this slide on? Okay, perfect. Thanks. It's early in the morning, so thanks everyone, and it's a big catch up to match up with Sunny. So definitely looking forward to it. So OMX is a GMX style perpetual platform which we are launching on Osmosis. We are planning to give very high leverage in the range of 50x to blue chip crypto assets like Bitcoin and ETH, and we are trying to launch long tail assets. A lot of the Cosmos assets are long tail. So just a quick background of the team. We've been working on finance. My own background is in high-frequency trading. We put together a team of finance professors, high-frequency traders, and technologists. And we've been kind of working over the last 3 months trying to kind of build this platform. So why did we choose Osmosis, and why did we think of building an OMX type of platform to Osmosis? So generally, the big part of the team is a quant background. So what we did was we ran some quant analysis in understanding DeFi opportunities. So there's a very important ETF type of instrument called DeFi Pulse. It's actually an instrument which gives you exposure to DEX, lending, and liquid staking derivatives on EVM. And so we looked at the time series of this ETF and correlated it to the time series when GMX came live, which was late October 2021. And what we wanted to see was how does the return profile of a DeFi ETF look compared to a GMX-style derivatives platform. So these three metrics are big terms in financial investment: returns, volatility, and drawdown. For some people who don't know what a drawdown is, so if you invest capital in an investment, the drawdown is actually the distance from the peak of the investment to the trough of the investment. So what we see here is this DeFi, the ETF Pulse, it has roughly 50% drawdown compared to the perps yield which GMX is offering. So when we look at the return, the cumulative return over the last almost 2 years, we see that the perps yield is very negatively correlated to the DeFi yield, which is liquid staking, DEX, and derivatives. So one of the objectives is if you combine perps yield to a DeFi yield, you see you can bring down the drawdown. So we thought that the DeFi instrument, the DeFi Pulse instrument, is something which is very similar to what Osmosis offers right now to its investors. So Osmosis has DEX, Osmosis has lending. So if we bring a perps kind of yield and you're an Osmo user, you can actually create a lot of different types of financial instruments. One of the objectives of giving perps yield is that you pay the yield in stablecoin. So it's not paid in native coin, it's paid in stablecoin. And including a perps yield into a DeFi portfolio reduces the variance. So what's the big design of OMX? So we are trying to bring GMX-style leverage to Osmosis. So we're using the Pyth oracles, which has been launched on Osmosis. And mostly we're going to use Pyth for finding the true asset price, as well as doing all the trading actions on Osmosis. So the two big innovations we are trying to bring in, one is how do we bootstrap the liquidity on OLP? So we are taking not just native assets like Bitcoin, ETH, Osmo, and Atom, but we're also taking liquid staking assets, which is staked Osmo and staked Atom. And because we're increasing the TVL of the OLP pool, we expect the trading actions to be a lot bigger. That creates more fees, and that actually creates more yield to whoever wants to put in their liquidity into the OLP. The second part is this tranche-based risk management, which we have introduced in OMX. On GMX, anyone who produces or pushes liquidity into GMX, they can't choose their risk or return. So everyone has the same risk or return. As a result, a lot of people are fearful of pushing liquidity into GMX. In case of OMX, based on the asset, you can actually choose if you want to put liquidity on a senior tranche, which has lower risk, lower return, or a junior tranche, which has higher risk, higher return. So the risk management plus the liquidity bootstrapping, these are two of the big innovations we are bringing in to OMX. So where are we in this journey? So we have been live on the Osmosis testnet roughly about a month, so you can actually go use the platform. We took part in the Osmosis Delphi hackathon. We secured a 3rd place. And so I want to get a little deeper into these 2 innovations we are bringing in on OMX. So one is how do we get the liquidity? So we think that we're one of the first LSD-Fi narrative. LSD-Fi is an acronym in DeFi where you can use the liquid staking assets to get yield from DeFi. So I want to walk you through an interesting situation that right now the LSD assets on Osmosis is roughly 10 million. You have 8 million in staked Atom and 2 million in staked Osmo. So if you have a user who has LSD assets, how does he come into the OMX platform and use this platform to get more leverage? So you have staked Atom, you come to the OLP pool, and the OLP pool determines the loan to value, the health of this staked asset. So generally the ratio is set at 50%, which means if you bring $100 of liquid stake assets, you can loan $50. When you're loaning this $50, you pay a borrowing interest on it, but you can take leverage. As a result, you're creating more trading actions on OMX in general. So fundamentally, we are, I think, the first LSD-Fi narrative in Osmosis, if not in Cosmos in general. Why we think this is a very important additive to the Cosmos ecosystem? Cosmos is an ecosystem which is very heavily staked. Atom is 68% staked. Osmosis is 43% staked. If you look at the dollar value which is staked, it's roughly $2 billion. So if you can get even a 20% of this $2 billion to achieve some form of yield, in this case, perps yield, that is some significant amount of scale you can come with your platform. We have talked to Stride. Stride is extremely excited about deploying these liquid stacked assets on OMX through Osmosis. And we are also super excited about the partnership we're talking about with Neutron. Neutron is bringing Lido, so staked ETH is going to be another asset which we can actually deploy. Fundamentally, one of the key aspects of using OMX is how much liquidity can we collect in the OLP pool. So if we take these liquid staking assets, we're actually giving a lot of the traders get access to more leverage. Let's stop here and let's kind of really take a step back. So fundamentally, what is the big difference between OMX and GMX? In GMX, you cannot take liquid staking assets. You only take native assets. So there's a reduction in scale that only people who have native assets, they can provide liquidity. The second aspect is the GLP pool on GMX, it does not really function like a lending platform. So it does not know that the people who are depositing liquidity, what is the factor they should use to give the leverage traders the borrowing interest. With this liquid staking narrative, which we are bringing to OMX, we are planning to transfer or transform the OLP pool into an advanced lending pool. So ideally, there will be a set of people who would bring in their liquid stake assets into the OLP pool, and there's going to be a set of people who are doing trading. And how we match the trading needs with the depositor liens, that kind of gives the OLP design a more advanced lending design. So that's what we have. The documentation is going to be live. Happy to kind of interact more on the design aspect. Fundamentally, if you launch a leverage trading platform, pretty much every leverage trading platform comes down to risk management. How do you manage risk when you want to give high leverage to new assets as well as native assets? So for us, this CDO type of tranching to manage the risk management was extremely important in order to be able to list long tail assets. If we know, if some of you guys have traded GMX, GMX is only available for native blue chip assets. They're not very fearful of listing new assets. So for us, using this tranching mechanism, what we are doing, these weights which we have are basically the risk of the asset. So the more volatile the asset, the weights get transferred to the junior tranche. The junior tranche is a first loss tranche. So if if the OLP pool loses money, the junior tranche gets exposed first, then the mezzanine tranche, then the senior tranche. So once we have come up with this design, we wanted to see that what if GMX used this design? So the bottom one is actually the return of the GMX, the GLP pool on GMX, and it has a 20% drawdown. When we apply our tranching mechanism, we see that we are able to reduce the drawdown for the senior tranche. The senior tranche is where people want less risk, lower drawdown. And using this tranching mechanism, we kind of expect that we are going to be able to get a lot of liquidity for people who want to play safe and for people who want to take a lot more risk. They would be attributed more for the junior tranche. So as I said, that the senior tranche is lower risk, lower drawdown. The junior tranche is higher risk, higher drawdown. This tranching mechanism lets you list a lot of highly volatile assets. And as we head into a bull market, Osmosis is going to list a lot of assets. And so we fundamentally think that we can actually offer leverage to these new assets based on this risk management criteria. So where are we in terms of the roadmap? So we started working, I would say like 2.5 months ago. We participated in the hackathon. Ever since then, we have accelerated the development. We have deployed the front end. We are actually doing a seed raise. So if anybody is interested in being part of the journey, reach out to me or the Osmosis team. We plan to be live. We plan to be live on testnet next month, and we plan to do a guarded launch at the later part of the year. We are planning to finish the audits by the later part of the year, so the earliest we are thinking is the first quarter of 2024. One thing we wanted to mention is we're a big group of finance professors, a quant team, so we are very excited about this concentrated liquidity update from Osmosis, and that was one of the big reasons of choosing Osmosis. So we can think that we are able to build a lot of different type of products in terms of delta neutral vaults, acting on quadratic leverage, as well as perpetual options, but that's something we are heading to for next year. So this is kind of like, some people told me don't use the shape pyramid. It gives bad signals, but like, pardon my graphics. So what we see is the Osmosis ecosystem is acting as a settlement layer for DeFi in the Cosmos ecosystem. And there's a lot of tools and integrations on the wallet side, the vault side, the money market side, and OMX is really acting to offer leverage wherever it can. We're very excited to bring MetaMask as integrated to our platform, so we expect to get a certain amount of EVM usage on the platform. And yes, so this is basically the end, so I don't know if I ran, so I'm happy to take some questions.